and the third one is time. And if you can pay attention to these three, especially as a derivative trader, you will cut out a lot of mistakes which you make in derivative trading. The whole idea as retail traders is to right? So all of you have seen this data from an options table before. Now the point over here is how do we maximize this information which is coming to us from the options table. Now the thing is about this particular information which you are looking at on your screens right now, especially this options, all the strikes and all the LTPs and all the volumes and all the open interest and all, this is flowing data. This data keeps coming in as the day progresses, and you tend to get a lot more information as the day goes on, as the day wears on. Now, what do we do with this information? How do we maximize this, and how do we actually use it to make profits today? That is what the agenda of today's talk is going to be all about, right? I'll keep the floor open for questions. Whatever questions you have, you can ask them directly to me. I'll be reading you all also, but we'll basically be focused on the role of information in the options market today, right? Now, I'm sure all of you have traded on the National Stock Exchange and have traded multiple days and are not new traders. I know a lot of you have been with us for a long time, and I know about the work we do. But for those who do not know me or do not know about the work which we are doing at VTrender, a quick introduction is in order. My name is Shai, and I run an organization by the name of VTrender. And besides being a derivative trader for about 18 years now, I basically found it in me mission to go out and spread what I know to fellow derivatives traders. And to do this, we've started working with people on the trades and the strategies which we use, the charts which we look at, and all the information which I look at during my trading day is now transparently visible to anybody who wants to look at them. Because of the limitations imposed on us by the regulators in terms of data, there is a ban on providing live streaming data on a free plan, but we do have a free plan for traders who are new to markets, whereas the premium plans would have live streaming data enabled, allowing you to meet those regulations which are imposed on by the exchanges, and you have an option to go in for those things. So today the data I'm going to share with you in the options table is going to be part of the premium plan. And if you do not see this, this is what you would get in a full-fledged plan. And I'm going to lead the conversation today purely on this information which is there in the options table. right? So I'm going to walk you through, okay, what I look at, what to make out, okay, of this information, and how best, okay, to utilize this information, okay, to form good trading decisions through the day. As I speak to you, most of the questions, okay, which you may have, okay, about what I intend to speak, okay, could get clarified. But in case they do not, the chat box is open. You can feel free, okay, to ask any number of questions over there, and I'm here, okay, to answer these questions for you. Right now, first and foremost, okay, when you're looking at this table, there is a lot of variation, okay, of these tables outside. We believe in providing this particular model of the options table, okay, to all our traders, and just want to explain to you a bit, okay, about what the information in this table is all about, right? So the central figure is this column right here, which is the strike price. So we start, okay, from this central figure. Always, okay, on our option tables, look out for this number, and if you go left, you will see the calls, and if you go right, you would see the puts. So we begin with here, and if you look at around over here, you will see, okay, some numbers, okay, which are S, some numbers which are N, and some numbers, okay, which are in B on green. That simply is this particular strike is controlled by sellers. This N would mean, okay, that this is neutral, and this particular B would tell you, okay, that those strikes are buyer dominated. That means, okay, buyers are there. So either the put side or the call side, but majorly, okay, dominated by buyers. That's why, okay, you would get a B over here. I'll also show you later in the program, okay, on how to, okay, pick up these charts. But we start from here and we go left, and you will see immediately, okay, the column right next to the left is the price. You'll get the call price and the put price, okay, right next to each other, okay, and this is a moving price through the day, LTP, and 95% of us, okay, are always, okay, price based traders, and this is, okay, a number, okay, which is very dear to us, okay, because, okay, this determines our entry, and where it goes, okay, during the day also decides, okay, how much profit, okay, we are going to take, or whether, okay, we have to pull out of a position in a stop also, right? Now the column right next to the price is the most important metric. In fact, okay, one of the two most important metrics of the chart, and we call it the VPOC and the VWAP of the particular call or put, okay, which you are looking at. So if you're looking at this particular section on the left, this VPOC and VPOC, okay, would be of these calls. So if you're looking at this 24,300, then that VPOC is 1.2 right now, and the VWAP is about 22. This is, of course, okay, of today's trading day. And if you go on the right, the VPOC and the VWAP is what, 1.3, okay, of today, or the 24,300 put, and 9.84 is the VWAP. Now VWAP, volume weighted average price. I'm sure, okay, all of you are very, very familiar, okay, with it, and it needs no introduction. All of us, okay, know how to trade, okay, with the VWAP, and simply means in terms of an options market, if price is above the VWAP, that means, okay, that instrument or that call, that put is in control of buyers over there. And if price is below the VWAP of that instrument, then, okay, writers or sellers are in control at that particular strike. That's the important, okay, formula, so to speak, okay, when you hear, okay, this word called VWAP, especially, okay, for an options market, right? And just a clarification over here, whatever we're going to be discussing is going to be central, okay, to the options market today, and we're going to be talking about specific use cases of the options market. Right. So if VWAP is volume weighted average price, what is VPOC? Now VPOC is simply the volume point of control, or in short, the area where the largest concentration of volume is on a volume profile chart. So there is a distinction we make at VTrender when it comes to volume. 95% of traders, when they look at volume, they look at volume below the price bar. Okay. At VTrender, what we do is we focus on volume right next to the price bar, and we also focus on volume inside the price bar. So volume inside the price bar is called order flow. Volume next to the price bar is called volume profile, and volume below the price is the traditional acceptance of that word called volume. It was always okay meant to be volume below the bar, right? Now there is a reason, okay, we've added a volume column right next to the VWAP and the VPOC, because okay, this is the flow of transaction money, the transactions during the day, right? A lot of people will not look at this as a factor, and I will be the first one to admit to you that for the options market there is a more powerful metric, which is the open interest, which is the substitute, or you can say a surrogate of volume, which helps you, okay, to decide, okay, what kind of money is coming into that instrument. We'll talk about that open interest also, but purely over here, if you look at the volume, okay, you will tell you which particular strikes of the market are attracting maximum volume, or which are attracting money that particular settlement day. So if you go down, you will see, okay, that some of these rows within this column of volume are marked in orange. Now simply put, this means, okay, that this particular strike had the higher of all the volume, okay, which got transacted. So every time, okay, you see this font in orange, that means, okay, there is a lot more volume coming in, and this is, okay, the metric, okay, which I look at when I am looking at which strikes are gonna do what in the market. So you will see that a lot of this ATM and in the money and slightly, okay, OTM is gonna always have the higher of the transactional volume. Now what does that mean? It means that you get a maximum number of traders trading at the money, okay, when compared to out of the money, right? So something like a 23,900, though popular, okay, and though used, is not having that kind of volume, whereas compared, okay, to at the money 24,300, right? So always, okay, pay attention to where the volume is. We also look at IVs, and these IVs are now, okay, inflated because of the settlement, okay, which happened about 1 hour back at 3:30, but these would be in the region of about 13 to 15 to 17, okay, during the day. They are steady on most settlement weeks of the year, but about a month back, the IVs were in the range of about 25 to 30 to 35. What does that tell you? That tells you that an IV which is higher will tell you, okay, that there is a lot more expected volatility in that particular call or that put. All right. So if you are the kind of trader, okay, who's say used to about 20-point stop loss, or most of us, okay, in writers, okay, use a 30% stop loss of strike and all, don't make it general, okay, always, okay, make it in the context of the IV. And if an IV is there around 13, 15, 16, yeah, you can use your 20-point stop loss. You can use that 30% of the premium as your stop loss, etc. But if this IV is double, okay, instead of 13, 15, it's about 25, 26, that 20-point stop loss is not going to work for you, right? And that 30%, okay, which you have in premium, which most of us, okay, use as a stop loss, it's not going to work for you. You will end up, okay, cursing the market, okay, because the market is going to just keep chopping you out, in and out, only because, okay, you have not paid attention to what the IV chart is telling you, the IV data is telling you, right? So this metric, okay, we have it always on our charts, and through the day, if this volatility changes, if it was 10, 12, and it suddenly, okay, shoots up to about 16, 17, you've got to be careful, because the market is expecting a lot more volatility coming your way, right? And now the column, okay, right next to it is what we call the DOI and the OI. And I'm sure, okay, all of you are experts, okay, in this right now. This is, okay, what is driving, okay, the information at the National Stock Exchange. DOI is simply developing OI, which means the open interest, which started at 9:15 and develops through the day till 3:30. And OI is all the OI, okay, which is accumulated in that call or in that put from the start of that weekly series, right? Now, all this data I'm looking at is for a duration of one weekly series, and this one, okay, I'm looking at is the 4th of July right here, right? So this is the particular one, okay, data of this, and all this open interest, etc., is for this. So if you want to, okay, go into the next one, the 11th of July, you just simply click over there, and the data, okay, which will load up on your screen, okay, on the options table, okay, would be for the 11th of July. If you want to see, okay, what the bank Nifty is doing, the DOI, etc., is gonna be changing, okay, based on the series, okay, which you choose. So one click over here, okay, to get through to all the open interest, etc. Another point, if you're seeing, okay, that you're traditionally, okay, used to seeing a lot of numbers, okay, for large numbers for open interest, but if you look at my chart, you're seeing a very small amount, okay, mentioned over here as the open interest. That's because my settings are in terms of contracts. They are not in terms of the total volume of the market or total shares of the market. How do I change that? Right next to the table titles, we have a gear icon over here, which is this one. And if I click on this, I get to go into settings, right? And I have chosen contracts. If you're not very familiar, okay, with the contracts, OI and volume data, I have chosen contracts because I like, okay, all the data across all my Nifty, Bank Nifty, Fin Nifty, and all the rest of the mid cap Nifty and all that I do to be uniform, okay, from Monday to Friday. So which is why, okay, I prefer, okay, looking at it everything in terms of contracts, because relatively speaking, it tells me, the Nifty today, okay, at one particular strike, okay, had about 20 lakh contracts. Now that, okay, is a little bit more better way of for me, okay, to measure the kind of volume coming in when compared to, say, a Bank Nifty of yesterday or a Fin Nifty of day before. And if you're not using it, I highly encourage, okay, that you start reading data in terms of contracts, because it will give you a better relative picture about what is expected in the market, right? So all our data, including the volume and including the open interest, is now depicted in terms of number of contracts, right? And to the extreme left, the first column, in fact, there's a lot of powerful information over here, and this is market moving information over here. So there are basically, okay, about 3 columns in this 3 sub columns, okay, within this particular column. We have price, the max OI, and the time of the max OI. And same thing, okay, the price, the min OI, and the time of that min OI. Now, how do I, what do I do, okay, with this information? So what I do over here is I look at that max OI. So in this particular strike, 24,300, the max OI hit was about 13,19,018 contracts at about 308. This is not really actionable. It's come down to about 7,34,000 because, okay, some profit booking, okay, happened later, and they withdrew, okay, some of that money. But the min OI was reached at 10 in the morning to about 272. And I always see this max OI and min OI against, okay, the current OI, and this one in green, which is the DOI. The DOI is the amount of new money which is flowing into the instrument today. It's the amount of new money which is flowing into the instrument today, right? And that is gonna tell you the kind of liquidity which is there and the kind of movement which is there. The more the amount of contracts flowing into a particular strike or into a particular instrument, a call or a put, the bigger, okay, can be the movement if price goes against them, right? So generally speaking, if this keeps on rising higher, the DOI and the open interest keeps rising, okay, that's a market, okay, which is attracting new money and they are stable. But if this starts to drop off, and I see a factor over here, okay, where the max OI is hit and we are well below the max OI, then I start thinking, okay, why are these writers covering? And if they are covering, price is gonna be, they are covering for a reason, and price is suddenly gonna move against them. So use this as a factor to see where the highest point in time was. We tell you the price at which it was high, we tell you the time at it was high, and we also tell you, okay, what was the amount, okay, at the highest point. And that's a kind of a peak where you can look at and you can quickly analyze, okay, how far, okay, we have come from the peak or from the bottom valley of the market. and from what time to what time. So suppose it's at 12:30 and I saw okay that the low was here and the market is still building up open interest. That means money is flowing into this particular call and they are stable to keep things over here, right? So this price, max OI and time, extremely useful. You will find this okay in this particular section also. Price, max OI time, and min OI time. All right, and the same information is replicated up to here for both calls and for puts. Okay, and I'll talk to you okay about these remaining columns in a bit. But before that, okay, let's look at some of the questions okay which have come in. And if you have any questions okay to ask me okay about what we've discussed, feel free okay to ask them in the text chat. Okay, so the question is okay, how to read OI and use it for deciding bias. OI by itself okay cannot decide bias. So if you believe that and somebody is okay told you okay that that is the only way okay you can decide a bias, I don't agree to it. Different people, different opinions. My personal opinion is I use OI with a number of other factors which you know all of you know okay, I use my OI along with market profile and my order flow as a supporting tool. Okay, so if you feel that you can make a decision purely on open interest data, it's a little bit off the truth, because those people who created that open interest, the early movers and all, early movers and shakers, they created it off a chart, right? The earliest people who created the open interest, okay, see the way open interest works is some people come, create the open interest, establish positions, open interest builds up. Some other people come behind them, look at that open interest and build further open interest. And a third set of people, okay, which comes in, okay, looks at the open interest which is built up and then okay, create further open interest. Okay, if the market goes against them, the third set of people are the ones okay which end up losing money, because their basis is a second group of people. But the people okay who formed that open interest or took that position and built that open interest based on a chart and based on a reading of the market, they have a grounding and they have a reason and they have a valid strategy on the basis of which okay they have built that open interest, right? So don't just use open interest. You have to okay get good at understanding technicalities of the market. I'll show you a way okay I build up okay my bias about the market, and that's okay through market profile and order flow. Use open interest as a supporting tool. So the question is so what we do is there is no volume definitely okay on the spot chart, okay, but we basically found a way of appending data to a spot chart okay from a futures. So that's an internal okay thing okay which works out, and the volume point of control okay can be added okay to spot charts also. The most perfect way is always going to be on a future, but because okay we are so much used okay to working with a spot chart, we found a way of adding the futures data on directly okay to a spot chart. So if you want okay more information okay about how to best use the VWAP and the VPOP, the recommended thing is that you use a futures chart. But if you're looking at it from a spot point of view, it's not that it cannot be done. There are always ways and means, okay, and if you are wanting to really search for them, you will find them out. Okay, we wanted it, so we found a way okay to do it, and we are quite happy okay with the way it works out. Right, so that's it for now. So for the max OI, and I want to continue because there's a lot okay I want to cover as we move on. So on the right side, I'll just shift my chart a bit, and I just want to explain okay a few more columns. So we have okay something called C and an PEOI spikes. Now these also work on the same principle as that max OI time and all, and they'll tell you okay at what price and at what time that particular CE spiked. And whenever okay you see a spike okay happening around the same time, okay, that tells you okay that there is a movement happening okay in that strike. Okay, this okay we can discuss in detail because there's a little bit more detail okay required, but just to put it in a very short statement and to come across okay to you okay about what is the intention of adding this column is it is to capture OI spikes, and we capture fast rapid movements whenever they happen, and they will be seen on a chart as well, which I will be showing you in a bit. But they all come in here as a column, and sometimes okay, you will see that the market suddenly goes against call writers or put writers, and then okay, the market okay is suddenly okay showing us a lot of spikes happening across okay all the strikes. So when this happens, it shows up okay in this particular column over here, right? We track okay straddles. Okay, right over here in these two boxes, okay, we can pick up any chart okay and open up a straddle, and I'll show you okay how to do that. The straddle price is reflected over here, the straddle VPOC and VWAP. So you don't have to go very far okay to find out okay what price okay the straddle VWAP is or the VPOC is. Both are right here. So 88 for the 24 250, 36 853, and generally okay when the LTP of that straddle is below this, you can see okay that the straddle is safely with the writers, and if the price is above, that's the time okay you can expect okay some kind of a straddle covering coming in. The net of all the open interest is here, okay, the pain is here, and the synthetic future okay 24,300 okay is where the pricing okay would eventually come down to. This is simply a math okay which is strike plus CE minus PE. Okay, and even if you do not want to have a look at this column, even in your terminals, okay, always okay look at that strike and you do CE minus PE, and you use that strike, okay, you will get the synthetic future or the synthetic price. Now this is okay what decides okay the final pricing. Okay, quickly okay walk it to the top of the table, and then okay we will look at more actionable info okay to drive. For now okay I'm still walking you through okay what is the information available, and then we'll take it one step down, and I'll walk you through okay how best okay you can utilize this information. At the top over here, you will see okay that there is something called gamma 0, which is the point okay at which okay the gamma is highest in the market. Okay, the OI pain is the same metric okay put differently, different calculation. The range expected by gamma, okay, the series wicks, the wicks range, and this thing. So there is a PCR, volume PCR, etc. All this okay is there to tell you at the start of a day about what is the kind of range. So I always look at this range, and I look at this gamma wall range, and I try to find out okay how much the market is expected to move for that particular day. Now this is okay with a certain degree of probability and possibility. Cannot say okay it's 100%, but within that realm of possibility okay we try to find out okay how much the market can move, and whether okay you can okay write puts below this number or calls above the higher number is subjective, is something okay which you can do that. And right at the very top you get all the instruments okay you look at, and what I generally tend to look at is this closing price. This is okay in the last 30 minutes. This will tell you okay where the strike is closing, okay, where the market is closing on a settlement day. The synthetic future is also right next to it, the time, etc. The ATR keeps us honest and humble okay about what is the kind of movement to be expected. So I do not expect okay a 300-point Nifty move if my ATR is 5 and 5-day ATR and 14-day ATR is 190. It's kind of stupid okay to expect a 400-point range, right? So just play okay to the pitch, play to the environment, play okay to what the market is telling you to do, and then okay you decipher accordingly. Now I'll just run through what the options table is all about, and the reason okay I wanted to run through this information with you is that because okay at the start of a trading day or at the end of a settlement day, I do my work okay at about 8 p.m. in the evening, just before okay the start of the new session when the trading session is closed, and I do a lot of work if the previous day, if the next day is a settlement day, and this is what I called my pitch report. For those of you who are familiar with cricket, this is okay what is called the pitch report. And why is this called a pitch report? Because this report okay tells me okay how much runs are to be scored on that pitch. Now every single pitch is different, every single settlement day is different, but one look at the open interest data, one look at the volume data, and one look at the charts okay within this data should tell you okay, with reasonable consistency, how much runs are there in the pitch. Now all pitches are different, like I said. So some pitches okay will just give you about 100 runs. Some pitches okay are good, okay, for 250 runs okay are also not going to be enough. So some days are going to be trending and some days are going to be flat. Today okay was an example of a flat day, and there was okay a little bit of evidence in data that it could be a flat day today, right? So all this pitch report okay comes to us okay as we go about, right? Now what do we do? Okay, first thing what we do is we look at where the open interest is concentrated, and obviously okay it's going to be concentrated at the money, right? Now when it is concentrated over there, okay, you can pull up a chart of that strike via this button over here. So if you just press this button, there are two buttons over here, right at the central column, the strike. If I press this, I'll open up okay the entire straddle in a market profile chart. Now I put this thing out yesterday. I did not trade this today because there was another element at trade, and this raid okay, and this trade had become risky. But I put this out on Twitter today, or Twitter yesterday, and I was looking at this straddle. So this is how okay you pick up a straddle straight okay off the options table, and the information okay comes to you okay from a market profile chart. And what is the market profile chart? Market profile chart for an option is simply okay giving you okay three important points. Where is the VWAP? And all our VWAP is going to be in green. Okay, where is the POC? The POC column, which I pointed out to you, the VWAP and the VPOC, that is this pink line. So the VPOC was 231. Here in this case, okay, the VPOC okay was right here. It was around this 160 number. And the third thing it gives you is this shaded region. This shaded region, which is called the value area. Now these are the only three metrics okay you actually require. There's actually one more required, the fourth metric okay, which is the profile shape and the profile structure. Now this is many times important to us as traders. So yesterday okay I called this profile a 313 profile, and whenever okay you see a 313 profile, you just focus okay on the value area low and the value area high. And if the market is below the value area low, if the market is below the value area low, okay, guess who is in control? The sellers are in control, right? And this is a good environment okay to be a writer. As we saw today, this market okay never made it above value area high, and the market okay kept dropping all the way zero. But this particular shape, this particular value area, and this particular structure was conducive okay to this kind of a trade today, and this was one of the things okay which came out okay in that pitch report today. Okay, was it a very good low risk high reward kind of a trade today to take? Not at the open. Okay, the market okay was very volatile in the very first hour of trade, and I didn't recommend this trade okay to a lot of us in our trading community also, and I personally okay did not take this trade. The reason being okay that there was a lot of buying which came in alternatively in both okay the 24,200 call today and the 24,400 put also later on in the day, right? So so this is okay the strike okay. You can get this directly okay off the options table. From the options table, if you click okay on this right here, these two columns, you can also okay get okay what all of you are familiar with, I'm sure, and this is what we call a line chart. Right here, this is the straddle, and at one click okay you can get this line chart also, right? Now what basically okay you get in this line chart is okay, so this is the entire okay line chart okay which is here okay, the price okay sloping down, and we've added okay this particular element over here which tells you okay how much okay this open interest is adding. Every time it is in green, it will tell you that there is a lot of open interest coming in, and it starts okay pulling down like this in pink color. This is okay telling you okay that the open interest okay is coming off the instrument, or money is okay coming away from this particular instrument. Okay, to this chart we've added VWAP, which I've been saying okay is a green colored line okay flowing down. And to this chart I've also added the volume point of control, which is the zone where the maximum volume got traded. Right now, okay, I'm looking at all this open interest coming in, and let me also add the open interest, which is this blue line. Right now, in this particular straddle, I'm seeing this green. Green means okay, open interest is coming into the instrument. Okay, I'm looking at where this came in, and I'm looking at this VPOC as it is forming. And wherever okay this VPOC is, that is telling you okay that the maximum open interest came at that level. Right, this continues green right up to here. So in open interest okay came initially at 120 here, then it came at this 80, then it came at 60, then it came at 40. Now thankfully for this strike today, most of the time okay it stayed above VWAP. Most of the time it stayed above VWAP. Most of the time it stayed below VWAP. Sorry, I'm very, very sorry okay about that. Most of the time it stayed below VWAP. This was the only time it went above VWAP, and there was a slight dip as it happened. Okay, all you need to do in a straddle chart, and this is basics, that you have to watch okay if the straddle okay stays below the VWAP. Okay, but more importantly, okay, what you have to do is you have to also watch okay the zones where that volume was traded. And for that, for us, okay, that information is given to us by the VPOC line. Right, and guess what happens okay if price okay crosses the VPOC along with the VWAP? All these people who came in here and built all this open interest, now they are in trouble. And this is the time okay you can pick up a short or a long gamma trade in the market. Right, so this is the way okay you can work out with these particular instruments. Right, I'll quickly pause okay, and I'll take okay some more questions also. I think okay there are no audio issues. Audio issues are fine. So gamma wall updation is end of day on live. There's no purpose of gamma wall updated end of day. Gamma is real-time live streaming information, and the best value to us okay is when it is live. So gamma wall is updated live as the market moves every second. All the analyzing okay which is required is already here. There's nothing okay an Excel okay can do. It's already analyzed and put up in this table, so there's no need okay of putting it into is the line chart available for stocks? So some of the more liquid ones okay have them, but we'll be having okay a lot more okay for stocks coming in. Currently okay we are focused okay on how it is working in the options market for the indices, and that's okay how we are going to be looking at it. Right now, if you want to look up and find out okay what to do okay with this particular strike, say only one side of it, say a call. Okay, so you can pick up okay the market profile chart of this call, and this was a little bit volatile today, but it dipped okay below value area low, and it was completely in control of the writers. Right now, again okay what I'm emphasizing over here is that the open interest itself is not enough okay to tell you okay which way the bias needs to be taken. You have to okay have a market profile chart open, and the reason the market profile chart works better than other charts is because okay it's got an element of time and volume, and this is just not my evidence or my observation. This is actually the observation okay from a large group of people okay I trade with every single day, and they have got okay some fantastic results okay about taking okay information from the markets via a market profile chart and utilizing it okay to create okay the open interest okay which is seen in the market. So it's their evidence okay which comes in. The other way okay you can do it is you can go okay through this menu over here and look at the open interest built up via the order flow also. Right, so right at the open, this is the order flow of the 24,300 today. So right at the open okay there was a case okay to be long, and these writers were under pressure, but there was a little bit of covering which happened over here, 110. But since these sellers showed up, since these sellers started showing up over here, this was a classic way of this market showing that there was a lot of writing which happened in. So all through this the COT which is the commitment of trade stayed red, and when a COT is red, it tells you that there is a lot of writing which is coming into that instrument, and you'll see all of this writing came here. So if you want to find out what is the bias of the market, the most accurate way for you, or the most proper way for you to do it, is to look at it in terms of an open interest chart, search for these imbalances. You will have to be a little bit more structured in your understanding of the order flow, and there is a little bit of work involved in understanding the order flow metric. Okay, but if you can do that, then understanding the bias of the market, it becomes relatively easier for you. So these writers came here around 70, 75. They sold into this market. This COT went green and went red, showing that there were writers, and they continued till there was a little bit of covering over here, but they continued writing right up to the close in this. And if you want to do it the other way, you can look at the puts also simultaneously. This is the 24,400 PE, and there was a case over here where the market suddenly found a lot of buying. This is what we were tracking early. 70,000 lot odd buyer had come in, who took it up in the market, and that is why there was pressure put in on that 24,350 PE during the day. What we recommend is, on a settlement day, is either to keep a call or a put out of the money, in the money, open on an order flow chart like this. You can keep it on a 30-minute time frame and keep tracking the open interest across, and look for where these imbalances are coming in. This is a very handy way for you to look at where the information, or where the market is adding the open interest today, right? So this is what happened earlier today, 24,350. So all this buying which came in was the reason that this instrument suddenly shot up, and that put a little bit of pressure. But otherwise apart from that, the market was very, very stable throughout the day. So just on that particular strike, staying with it. So what we noticed was that this was a very stable environment for writers today, in that 24,300. But here, right at the open, in that very first hour, there was a run done on pull writers. But before that, there was a run on call writers. But after that, there was a stable open interest added throughout the day, right? And you could see that in the options table also. And the open interest right through was going up higher in the 24,300 CE. So the question is how to choose the strike price for your analysis. So it depends. If you're a writer, you will choose and add the money. But if you're a buyer, I always suggest that you go in the money. So you go in the money by about 100. So if the movement of price is around 24,300, and if you're looking for a downward move and the order flow is signaling a move down, you'll go with a 24,400 put. But stay within these orange ones. Go for the most liquid of those strikes, and choose your strikes accordingly. Right? I'll pause here. If there are any more questions, guys, about what we discussed, please feel free to shoot. So one thing I wanted to point out to you is that if you are also looking for biases, and where the market was at a certain point in the past, you can use this slider. And you can look at where the market is building up open interest at any point in time. So these are represented by the letters A, B, C, and E. These are nothing but TPO ones for us, and you can slide this anytime left or right to find out where the market was trading at a particular time, what was the price, what was the open interest, etc. You can choose it, and then again form a conviction based on the information which is there. Want to reset, just press reset and it will come back to the current time. Yes, you can have line charts as well. I showed it to you. So this is a line chart of the 24,300. So in this case, this was completely with writers, because like I mentioned, it was below VWAP. But if this goes up above this POC, the last developed zone of that POC, and it goes up above VWAP, that is the time you can look for long gamma trades in this particular instrument. Right. So to get into a line chart of an option, all you have to do is go to the index table and choose the column called strike, and you would be getting it over there. Any more questions, guys, on what we discussed? So just to sum up, what we are looking for is a way to understand the data. What we are looking for is a way to understand data and the information which the market is trying to give us. Via the options table, the market is always feeding us a lot more information, and sometimes the information coming from the market is overwhelming, is big. It is there for us to there. But the whole purpose of us as traders is to learn how to monetize this information. And if you are in a position to monetize the information which the market is giving you, data is a new oil. Data is what is driving everything in the markets today. And I have been a trader who's always believed that we have to exploit the power in data. And if you keep ignoring data, if you keep ignoring information, and if you're relying on old, outdated information, then you're putting yourself up for a life of struggle in the markets. The markets tend to keep changing all the times. Just like how I love my cricket, and I use this example a lot when I'm talking to my friends also. The cricket which was played by the likes of Kapil Dev and Ravi Shastri and Sunil Gavaskar back in the 80s is very, very different from the cricket which is played today. In fact, Sunil Gavaskar, when he was playing, he was not even going to the crease with a proper helmet. Now I remember images of him wearing that white kind of a protection, and that is all he had. He never wore a helmet in his life. And fast forward to 2024, you will not find a single cricketer facing a fast bowler without a helmet. It's mandated in the rules also that you have to wear a helmet compulsorily today. And not just that, they have arm guard protection and all kinds of guards, etc., etc. The game has changed. Now, why am I saying that? Because a lot of traders, when they come to the markets, they are focused on a lot of trading strategies which were once very useful, but back in about 90s and 2000s and 2010. In the last decade, the kind of change which has happened in the market has been astronomical, big, huge impact. It has propelled NSE to be the #1 derivatives exchange in the world in terms of contracts traded. And it's not just retail traders, it's a lot of institutions from overseas who have come in and who are trading in these markets today, right? So it's up to you. You can ignore all that is happening around you, or you can make life better for yourself. And the way you can make life better for yourself is to arm yourself with information, and not just arm yourself with information, learn how to strategize with that information, learn how to monetize with that information. Now for that, there is work involved, and you will have to put that work. You cannot come back to the markets again and again as that same person who traded yesterday, right? Even if you made a loss, the fact that you did not take a lesson out of that loss does not change you as a trader. So even if a loss comes in, it gives you a lesson, it teaches you something, it tells you what you should not do. And if you're not taking those lessons, you're not progressing and becoming a better trader. right? If you're not taking help, okay, from your community, from the people, okay, you trade with, or if you're surrounded yourself, okay, in a community, okay, which pulls you down all the time, you're not growing, you're making life difficult for you as a trader also, right? Now, why am I saying all this? Because I've seen a lot of traders change when they have been given new information, and I've seen them change, okay, when they have changed their tools, and I've seen them change, okay, when they have changed the way, okay, they trade and the strategies, okay, they have trade. A lot of traders have come to me and they have told me, okay, no, this is not working for me, and I've told them, try it this way, and they have gone to trade that way and they have got those results, okay, for themselves. It's just a new way of looking at everything, and there's always a new way of looking at things, provided, okay, you go and you search for it, right? So I leave you with this. We discussed, okay, a lot, okay, about what the options table was. I nudged you to go beyond looking at price and to focus on VWAP and VPOC. I also nudged you to find out on points from where, okay, the VPOC is in a line chart, in a market profile chart. I asked you, okay, to look at the information from open interest, why market profile, and if possible, okay, if you can go to an order flow chart to find out, okay, where the imbalances are. All of that collectively, okay, together can put you on a very sound footing when it comes, okay, to picking up biases from the market. So I hope, okay, this session was useful to all of you. If you have any questions, okay, please feel free to share. Please feel free to ask. I am, okay, always on Twitter. Okay, you can, okay, always, okay, DM me, or you can, okay, message me over there. Our support numbers are 9284331270 on WhatsApp, or you can also message us on support@vtrender.com. Right. Thank you all for coming in. There's going to be a recording of this, okay, kept for you on YouTube, just in case, okay, you want to go through it again. But I'll join you for our next session, which is going to be the coming Monday, where we're going to be looking at the weekly outlook again, right? So that's it for me for now. Thank you all for coming in, and we'll see you, okay, soon. Thank you.